my guess, First Republic becomes part of JP Morgan this weekend. You heard it here first. I believe that Solana has the chance to emerge as the tech that it should be, as opposed to the manipulative scam that it was created by Sam and a few others.
In a recent discussion, Mark Yusko sheds light on the persisting banking panic following the loss of nearly $100 billion in deposits and a staggering 95% drop in stocks for First Republic Bank. The conversation then shifts towards the crypto market, with Bitcoin trading at approximately $30,000 and veteran crypto investors initiating transfers from previously inactive addresses. News sources report that the Federal Deposit Insurance Corporation, a key financial regulator in the U.S., has invited bids for First Republic and is currently reviewing them following the deadline at the end of last week. Major investment bank J.P. Morgan Chase is rumored to be one of the invited bidders for First Republic, as per reports from Reuters. Another bank approached for the same is believed to be Bank of America. Last month's banking panic led to a loss of $100 billion in deposits for First Republic.
First Republic pissing on graves. I mean, look, people are pissing on this grave. They are burying this business. They're basically saying it's dead and buried, and stock's down 98, 97, whatever percent. It's really sad the way I think the way people are acting around this whole crisis. I mean, we're in a banking crisis, and it's not getting as much attention as the global financial crisis. And yet I'll argue this is worse, because we're fundamentally chipping away at the bedrock of what makes our society great. And I'll say it over and over, and the Bitcoin Maxis will yell at me. Fractional reserve banking is what makes society great. It just does. And by chipping away at the foundation of that, by eroding the confidence in the confidence game, it's, that's a con game. That's a con. No, confidence. It's about confidence and making capital work. Without financial institutions, capital sits idle in mattresses and countries implode. Look at Greece, okay? When they took all the money out of the banks and they put it in the mattresses, what happened to the Greek economy? It got bought by China. So I don't know. I get really angry about this, actually.
Mark Yusko highlights that one of the critical factors to consider while investing in hedge funds is liquidity. In simple terms, the liquidity of a fund must align with that of the underlying assets it holds. For instance, a fund that primarily trades futures should have better liquidity than a fund that focuses on investing in private debt. As per Mark Yusko, the season appears to be changing with the surge in global liquidity, something that has been a long time coming. While Bitcoin experienced a crash a month ago, it has bounced back and the market has gained almost 50% in value since then.
When assets are illiquid, meaning the number of shares that trade on a daily basis is low relative to what a single owner owns, or a family, or a corporation, that's where you get the hijinks. And there are lots and lots and lots of examples over the years in equity markets, in bond markets. You look at the COCO's market, right? That just happened with the CS thing. They're so relatively illiquid that, and I love the word hijinks. I just like to say it, that hijinks can occur. And look, I also think we live in this crazy time. I mean, I should say crazy, this unique time that social media and 24/7 always on media, not just MSM, but the citizen media, where people are trying to make a name for themselves. They may be trying to manipulate markets. It's tough. And now with increasing deep fake stuff,
The U.S. House of Representatives, led by the Republican Party, has approved a bill that proposes spending cuts worth $4.8 trillion, along with an increase in the federal government's current debt ceiling of $31.4 trillion. Mark's belief is that the debt and deficit saw the highest increase ever under the last two Republican administrations. He suggests that the issue is not a matter of left versus right or political parties, but rather a serious problem that is reflected in the chart and should be plotted on a logarithmic scale. Mark Yusko notes that we are witnessing a loss of $1.5 trillion in liquidity, with investors purchasing assets they prefer. Cryptocurrencies like Bitcoin and Ethereum have garnered significant support, with Bitcoin achieving new highs in terms of adoption and other key metrics, according to Yusko.
Greatest increase in the debt and deficit ever under Republicans, last two Republicans. Again, there's no left, there's no right, there's no Republican. It's just in and out. But this is a really bad chart crime in that it needs to be log scale when it's that long a period. But the fact is, it's a 45-degree line, and it ain't stopping. And it really, if you overlaid the money supply, it would just be that. All this is a reflection of the stealing of our wealth through inflation that's been happening since 1913. If you did it from 1776 to 1913, it'd be dead flat. And so it's money illusion. It's really not important. And the fact that everybody's talking about it, we have to talk about it too. But it's kabuki theater. A really interesting element of an immature market, right? Just concentrated pockets of illiquidity that generate risk. And one of the things about Bitcoin in particular is the incremental movement of coins is pretty low relative to the number of coins that are either hodled or lost, stolen, whatever. There's all kinds of theories on the Satoshi wallet. Craig's like, it's mine. Well, prove it, Craig. I mean, move something from it. So, the better, more likely scenario is it really was a multi-sig, and they can't get all the SIGs now because someone has passed away. That seems more likely to me. Because I always come back to name a CEO. Right? If you think of the creator of the protocol as the CEO, I mean, really isn't the CEO, but name a CEO of any organization that didn't take some chips off the table at some point, just for liquidity purposes. Or you can't find them.
According to Yusko, the way people are responding to the current banking crisis is concerning. Despite being in the midst of a banking crisis, it does not seem to be receiving as much attention as the global financial crisis did. In an immature market, a notable characteristic is the presence of concentrated pockets of illiquidity that can generate significant risks. To wrap up our discussion today, we invite you to leave your thoughts in the comments section. If you found this content useful, please show your support by giving it a thumbs up and subscribing to our channel for the latest news and videos. Thanks for watching.